Are you like most sales and other professionals who want to grow their wealth faster than what they are currently doing through their company 401k, even with that company match, the stock market, or just plain saving money? Would you sleep better at night if you had the financial freedom to be job optional in just 3 to 5 years through investing in real assets? Maybe you don't want to stop working, but wouldn't it be cool if you could retire a decade earlier than most and do the traveling you and your family have planned for years while you're still young and can enjoy it? Let's face it, most busy professionals don't have the time or desire to take on more work outside of their W-2 to grow their wealth. On The Wealth Flow, each week we share the stories, the investments, and take a deep dive into the various asset classes that can deliver that accelerated growth to your portfolio passively. That's right, no extra work for you. Instead, we'll put your money to work. Learn what the 95% aren't talking about and join the top 5% of earners today on The Wealth Flow.
All right, welcome to The Wealth Flow. My guest today is Dani Lynn Robison. She is the founder and CEO of Freedom Family Investments. Dani specializes in helping high-income professionals transition from being operators of their own business lives to allocators of capital into durable needs-based assets. Her team has collectively managed more than $1 billion in assets and raised $250 million in capital, maintaining consistent distributions across multiple market cycles. Dani is also the author of the Amazon bestseller, Calm Money, Never Panics, and she has been featured on Dr. Phil's platform, the Wealthy Way podcast with Ryan Pena, and also Dropping Bombs with Brad Lea. So, Dani, I am looking forward to our conversation today.
Me as well. Thank you so much for having me, Keith.
Absolutely. I love to always start with everybody's background, where you grew up and what eventually led you to this world of investing and managing money.
Yeah. So I grew up in Phoenix, Arizona. Dry heat is the joke for everybody that's been there. And I love it because I now live in Florida and I'd rather be stepping into an oven than to the shower of humidity that I'm in right now.
Yeah.
But I do love Florida. But I went to college. I was a musician, played trumpet, and I got a scholarship to go to college in Florida. And after I went to college, while I was in college, I worked at Walt Disney World. And then after Walt Disney World, I got invited to play trumpet on cruise ships. And after cruise ships, while I was on cruise ships, I met my husband, my now husband. And he was also a trumpet player. Funny enough, he also went to college in Florida, also worked at Walt Disney World, also got on cruise ships. And he was getting off a cruise ship when I was getting on. Like, our story is really crazy.
Oh, wow. That is crazy.
Yeah. So while we were on cruise ships and we were musicians, we only worked a couple days a week, maybe practiced a couple hours a day. It's just, it's a pretty easy life for a musician on a cruise ship. And so we had a lot of spare time. And so I worked for an art auctioneer on cruise ships, just for extra money and just to keep myself busy. And one day he said, Dani, go to my cabin and pick up some paperwork. And so I said, okay, no problem. I ran to his cabin, got the paperwork. On his bed was his commission check, right where I was getting the paperwork. I wasn't snooping. And his commission check was big. And for a musician, we do not make a lot of money.
Right.
I was like, what? And so I ran, my husband's name is Flip. It's short for Philip. And so I ran to Flip's cabin and I swung open the door and I said, you're going to be an art auctioneer. And so that's what led us to that path in part of our lives. And we became art auctioneers. We stayed on cruise ships. We're on cruise ships for a total of 10 years. And after that, we got promoted onto land, started flying around the United States every other weekend to still do VIP art auctions. And eventually, we were just tired of travel. Flip will always joke, when you wake up and say, I'm in St. Thomas again, like that's time to stop traveling. And so I decided that I was going to be the one to find my next career, my next move, while he stayed doing the art auction so he could, financially support me in my next career move. And so I didn't know what I wanted to do. And so I knew I really loved money. And so I wanted to be in financial services of some sort. So I tried financial services and insurance at first, gave it a year, didn't love it. Then I went into mortgage, gave it a year, didn't love it. Then I went into mergers and acquisitions, didn't even give it a year. I loved the business side of it, but I didn't love cold calling, which is where I had to start.
Right.
And so the next move was real estate. And so I got my realtor's license. It was during COVID. So it was 8 months of not doing a deal, didn't have a network because we've been traveling and been on cruise ships this whole time. And most people start with their family and friends, which we didn't have. So I was like, when I did have the deals, it was the crash, right? And so you were dealing with these sellers who just thought, my house should still be worth what it was. Like this can't be happening. And they would just be so
Right.
unreasonable. And I couldn't do anything. And so I was so frustrated that I felt like the control of my life was in somebody else's hands as a realtor. And so I talked to my broker and I said, hey, I want to learn the investing side of the business. I want to have more control about what I'm doing. And I'm sure I didn't use those words, but I use them now to describe what I was looking for in that transition of realtor to investor. And so interviewed or reached out to 3 mentors. Only one replied. And it happened to be a perfect one. He was active in the community, ran a real estate investing club, was a multimillionaire, was a tech guy. So really kind of came ground up in real estate. And he taught us 12 ways to buy and sell real estate. And in that market, we were learning short sales, we were learning sub 2, we were learning mortgage assignments, we were learning all the things that you would do in 2008 for it to work well.
Mhm.
And so that is my journey to real estate.
Wow. Okay. No, that's fantastic. And so, and you got onto the real estate side from an investment standpoint. Started to learn about that. Tell me a little bit about, about just kind of where that was. Obviously, you said the market. Obviously at that time, subject tos and various things like that seemed to be a good path. Why was that? And what did you learn from that experience?
Yeah. So those strategies were good for that time because people were underwater. I was living in Round Rock, which is just north of Austin, Texas. And
Mhm.
there's a lot of new communities being built. And so everybody who had recently purchased a new house, maybe bought it at $200,000 and now it's, maybe had a loan of $200,000 and now it's like worth 150, right? There is no
Mhm.
way out. They can't do anything. And so it was that market. So during that time, the best strategies were, how do you help those sellers? Like you do a short sale. And that's why I didn't love being a realtor, because they were trying to sell it. They were trying to recover. They didn't want to do a short sale and they didn't want to be foreclosed on, but they had to move. And so when I learned subject to the other part, so you know real estate well enough to know that you can wholesale a subject to. So
Right.
essentially the phrase it was back then by my mentor was a mortgage assignment. And it was wholesaling a subject to. So I would talk to you, Keith, and I'd say, hey, Keith, you've got this house, you've got this mortgage for $200,000, but right now in this market, it's only worth $150,000. I've got this buyer who can't get a loan in this market either, but he wants your house and he's willing to pay a premium for it because he knows that over time it's going to go back up in value. And so
Mhm.
he's willing to pay, say, $210,000, $220,000 for it. He's going to give me a down payment. That's what's going to pay me for my services. He's going to take over your loan. And that's how this marriage essentially works. And so we would find sellers who just had no other choice. Like that was their least worst option. It was either that
Yeah.
or a foreclosure or a short sale, right? So what other choice could they make? And we offered them all of them. It was their choice what they did. And so this other buyer doesn't mind paying the premium because they can't get the loan, doesn't mind the down payment. So we matched those together, and that was really our entry into real estate. And, we did everything in a scrappy way you would when you're in that market and you don't exactly know what to do and you're just starting out. And we would, go through the neighborhoods and use bright neon colored paper and put it in the door jams, because you could just go to one new home community and you'd have hundreds of deals, right?
Yeah.
Anybody in the community that was trying to sell needed your solution. So that's how we got started.
Okay. No, that's awesome. And so you didn't have to necessarily focus. So worked those before as well, and we focused a lot of times on like pre-foreclosures and foreclosures at the end. And they were obviously desperate at that point to move forward. But
That's
you're
right.
right, in a market where things aren't moving and there's an opportunity for them to still to be able to move, and be that one house or piece of inventory within that neighborhood that actually sticks out because there's a different way to do it, then that can sometimes make sense. So
Yeah.
that's great.
Yeah, 100%. And I will say that people laugh when I say I got started in 2008 in real estate, right? But I would say that it's the biggest blessing because I got started in a down market. So I had to figure out how to succeed in a down market, which makes it a whole lot easier as you start navigating the good markets and you're like, whoa, this is awesome. Okay, new strategies, we can figure out what we can do here. We don't need to do subject to. We don't need to do these mortgage assignments anymore. We can do different things. And when the market goes back down, you've got the knowledge and the experience to tap into creativity in how do you make deals work and how do you have those conversations with sellers.
Yeah, for sure. No, that's awesome. I was started in real estate a little bit before, in 2005, and is when I opened up my brokerage. So it was just right before perfect timing, right before the market just completely stopped on me. So I had to navigate through that as well. And it was an interesting time, and it taught me as well how to do short sales and those kinds of things. I hadn't even heard of a short sale before 2007, 2008. So.
Right. Yes, man, the market changes teach us all something.
For sure. So that's where you started. And then where did you go from there as far as your real estate journey?
Yeah. So I'm going to fast forward to turnkey because that's what I remember the most. We learned 12 different ways to buy and sell real estate. So we were really navigating the market and what was going to work. And eventually we had moved to Arizona because my mom got really, really sick. She went in the ICU and I didn't know how much longer that she was going to be with us. So I wanted to spend some time there. And so we moved to Arizona, and it was a point in time where I was still doing some subject to deals, but the market was better. So I was learning how to wholesale. And so I got online in Facebook, and I went and found people who were doing volume because I am just a very big thinker. I think that there is no ceiling, and I think I'm unlimited and I can do anything. And so I was like, let me find the people who are doing really big things and let me learn from them, get in that circle and figure out where I can take it. And so I found people who were doing a lot of deals and they were doing the wholesaling. And so one of them was also doing turnkey real estate. And so in that process, I learned about turnkey real estate. And that's essentially a done-for-you rental property. You as the investor are going to go find it, you're going to rehab it, you're going to tenant it, you're going to manage it, and you're going to sell it to an investor who might be a physician or attorney or some high net worth position where they understand the power of wealth building through real estate, but they don't have the time to do it themselves. So you give them on a platter that done-for-you rental so they have cash flow. And it was crazy. My husband was out in the backyard in Arizona selling a house that was in Ohio to a cash flow investor that was in California. And we're just like, this is cool. I love this strategy.
Yeah.
And so the guy that we were working with, he was working off of email and a whiteboard. And he's like, Dani, I love your operational brain. And so I would love for you to, come to Ohio and let's just build this thing together. And so we ended up moving to Ohio. It's a longer story. It's not really relevant to the conversation, so I won't add why we ended up making that decision. But we moved to Ohio and we partnered up with him and did turnkey real estate. And that's where my Freedom family of companies began.
Okay. All right. So it sounds like it took off from there, which is great. And that is an awesome platform to be able to do. Like you said, there's a lot of people that are interested, that have heard about doing real estate. They don't want to necessarily do the fixer-uppers. And so in these cases, a lot of times you've already done the rehabs and kind of brought it up to speed so that it's accessible, probably made some money on that piece of the puzzle as well. And because you obviously increase the value of it. And then, once you've got a tenant in there, it's ready to go for a new investor. So
Exactly right. You described it perfectly.
All right. Sounds good. And so was this always still in Ohio, and what part of Ohio?
Yeah. All of our turnkey real estate was in Ohio and right in between Dayton and Cincinnati, Ohio. So our offices are Centerville, Ohio, is actually, we're in between leases at the moment, but you can imagine we had a 15,000 square foot office space. And
oh, wow.
Through everything going on, we vertically integrated. So that's the thing about turnkey real estate. If you outsource any of it, you're going to learn really fast how much other people have control over your ability to succeed. So renovations, property management, acquisitions, like one by one, and we just grabbed it and pulled it in-house. And so eventually we got to that 15,000 square foot. So we had materials, we had everything in-house. And it was so much better because we did have control. And I would tell my investors, look, now I can walk down the hall. We're going to screw up. We're human. Like, it is not going to be perfect. But don't even think that. But now when something happens, I can run down the hall and knock on my property manager's door as opposed to relying on somebody else. So we loved that piece of the vertical integration. But we are in between leases right now because that was just ended up being too big. Because look, we're all working from home, right? I've got so many people, and we're all across the United States.
Yeah, that's the beauty of real estate. You don't all have to be boots on the ground there. So
yeah,
that's great. So and so that's what you mentioned, the Freedom group of businesses. So tell me a little bit about each of your businesses. That what's the picture look like now?
Yeah, so I'll tell you what we did and where we scaled back and why. So we vertically integrated as the turnkey company. So we started off as the turnkey company. That's what we were doing. We are going out, buying the property from a wholesaler. Then we are hiring contractors to renovate it. Then we are hiring a property management team to manage it. And then we would sell that property to somebody in California, somebody in Texas, wherever they are, as a cash flowing property. Renovations was the very first thing that just, man, what a nightmare, depending on other people. And so brought renovations in-house. That was the first thing. And then property management was the second thing. We went through 5 property management companies before we said, forget it, I'm going to build that in-house. And 2 of the hardest companies, like that, I don't want to be in that business, and I'll tell you why I'm out of it now. But renovations was first, property management was second. Because we were bringing property management in-house, we might as well have a brokerage so that any deals that we were flipping ourselves, we could just also list ourselves. So we had the brokerage as a third company. Then acquisitions, all the wholesalers in our area dried up. And I was like, I've got multiple companies I have to support and team members, and I have no deals. So catastrophe. So we brought acquisitions in-house, and that was the 5th company. And so now we had the whole entire thing, start to finish, to be able to do. And then there was a day that we had a seller who had 12 single family, 3 duplexes, and a 56-unit apartment complex. And so we didn't do apartments. And so we said, yes, we'll buy these. We're going to go ahead and wholesale the apartment complex to somebody here in the area. We found our buyer. We were going to get a $200,000 wholesale fee. And it was right when COVID hit. And so obviously lending tightened up. And so the first loan didn't work. And so we had to go to the next loan. So we're waiting. The seller will not sell us the 12 single family and 3 duplexes without closing on the apartments too. This is going to be the entire package. So we're like, this sucks. Okay, we're going to wait. And so we're pushing. Finally, we get to the finish line with his second lender, and the buyer tries to cut us out of the deal completely. And I was just like, oh no, not gonna happen. I'm just gonna buy these myself. I'm just gonna not let anybody make me wait and screw me over like that. And so I at the time didn't know what funds and syndications were. And so I had my private money lenders, and I said, hey, I'm buying this 56-unit apartment complex. There's 4 buildings. I'm going to put you 1 per building on these. And here's the business plan. Here's what we're going to do. So got those private money lenders on board, did all of our due diligence in 2 weeks and closed, because the seller was just like, I'm tired, I'm backing out. And I was like, oh, no, you're not. We're closing. And so that was my first apartment complex. Because that went so fast, we call that apartment complex Drugs, Thugs, and Bugs. And that perfectly describes what that deal was. It was a nightmare, but ended up being a huge home run. And what a business lesson for me to be doing single family across Dayton and Cincinnati versus a 56-unit all in one place. The economies of scale was like, ding, 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 ding. Okay, I want to do this. I don't want to do the single family anymore. And it wasn't even that. I was fine with single family, but the rest of the story is we ended up scaling back turnkey and closing down renovations, selling our property management company, keeping enough of those people in-house and moving it over to what Freedom Family Investments is today, so that we could still be vertically integrated, but without the companies that were also externally doing work for other people. We just wanted to serve ourselves. And so that's the vertical integration that we have now. We're now not doing single family anymore because we did shut down turnkey. We're doing senior housing, multifamily, and self-storage. So needs-based real estate. That's something that we can talk about. That's really I'm preaching that to the choir. I'm sure you know exactly why. And so that's what we do now. We also have our wholesaling company still alive, National Houses. We kept that because I believe that's going to be a powerful source for Freedom Family Investments, because a lot of our clients are landlords, our investors, they're landlords, and they realize after time, this is a second job. Like, this is something where we don't just call them tired landlords. We call them tired and broke because it takes some time to actually see the value that comes out of those properties. So we wanted National Houses to be able to take the properties and help them sell the properties and then bring them over to Freedom Family Investments. So we kept that company alive. We also started a lead generation companies because we are so good at SMS marketing to find deals for the wholesaling company that we decided to do that lead generation for like roofers and HVAC people and stuff like that. So we've kept that company. That was company number probably 7. We kept that company in-house, and we have a small hard money lending company that we've kept, but we don't advertise it because it's only used when we have excess capital and I need to keep the money working. So I just use people I know that are close to me, and I say, hey, we have extra money. Does anybody have a deal that you want us to do? But we intend to eventually intentionally scale that company.
Okay. No, that's great. That's fantastic to hear. There's just so many different avenues, and you vertically integrated quite a bit there, with these different companies. And you saw some that you said, hey, this was working really well for what we're doing. And then you also pivoted from time to time. So that's just a fantastic journey to hear about. Hey, everyone. Sorry for the quick interruption. I wanted to personally let the WealthFlow audience know that we've launched several unique investment opportunities for accredited investors through my company, Slipstream AI Infrastructure. Our first is a data center land fund that focuses on acquiring strategic sites with power and creating value through entitlements before selling to one of our data center developers. Also, we've created a dual fund strategy, which combines cash flowing commercial real estate, which is already performing, and adding modular AI data center through a triple net lease to create multiple income streams and provide a targeted 3 to 5x LP investment return by boosting the net operating income. If you're an accredited investor and you'd like to learn more, visit Slipstream AI. That's again, slipstreamai.com. You'll find fund information, details on each opportunity, and you can schedule a call directly with our team. Now let's get back to the wealth flow. Tell me a little bit about how you're finding multifamily deals now, and are you focused still in kind of the Cincinnati, Dayton area, or have you branched out to other parts of the U.S.?
Yeah, so we're always brought the deals. We have such a big network that the deals get brought to us, and then we underwrite them, find them, and then ultimately partner with whoever brought us the deal. So it is pretty rare for us to find a deal ourselves anymore. Even national houses, eventually I want them to start finding our own deals and start actually looking, but we've never trained them on commercial. They are trained on single family. So I don't have the people in seat right now to really do that for us. So all of our deals are partnered with somebody else who brought us the deal, or we pay them like a wholesale fee. So they essentially wholesale it. That's pretty rare. Something that I've learned, so I told you that like I have this unlimited mindset. I just want to keep on going and growing as much as I can, right? One thing that I learned when in this business is, especially commercial, like it really does take a team and a team of experts to do a really, really good job. And so there's many parts, to, bringing the deal, actually managing the renovations, asset management versus property management. And so I decided that I was going to figure out how to play with the best, because there was no way to answer your question about where my deals are. They were in Ohio because that was my backyard. That's where I'm vertically integrated. So that's where I can control all the pieces of the puzzle. But there was deals brought to me in Columbus, Ohio. I'm not there. It's only an hour away. I said, no big deal. But we did find a property manager, out there to be able to do it. Fired one, found another one. He's good. We have another one in Menor, I think is how you pronounce it, Ohio. So we spread across Ohio and started realizing, hey, we can, actually manage people to a level if we find somebody good and do our appropriate due diligence to be able to partner. And if I really want to scale, there's no way I can be operator and allocator at the same time. I can't raise capital and do all of the other work too. So we intentionally have decided to sit in the allocator seat, meaning we are really good at raising capital. And it's because of our track record. It's because we've maintained distributions. It's because we write in all of our contracts that if you screw up, then we get to step in. And we have stepped in and kicked people out of a deal so that it didn't go bad, because we all know what's happened over the last 2 years. So you
For
have to
sure.
have somebody in seat that has the character to be able to fight, because some people are going to run and some people are going to fight and make sure that they protect the asset, protect the investors. And because we're the ones raising the capital, nobody's going to fight harder than we are. So that's how we've really shifted and modeled our business. And now we just work with best in class operators, and we're getting to the stage where we're really looking at bigger opportunities so that we can. We've got institutional people and family offices that are now just like, hey, we like what you're doing. We like what you're investing in. We want to invest too. Okay, well, how do I do that and be able to put that much capital to work, but still serve my retail investors?
Yeah. Yeah. Okay. Sounds good. And so are you doing all of the raising through some type of a syndication or some type of a fund? What's the structure behind it?
Yeah, we have two funds we're actively raising for right now.
Okay.
One was intentionally for a hard money fund. So the company that I said we're not fully launched, but we're leaving that fund in place because it was structured and meant for the hard money lending company. So we still use that for people who want liquidity. It's like you can get your money back out in 90 days. I think there's a lockup period for 6 months, allows us to put the money to work. But then after that, you can give us notice and get it out in 90 days. But the fund that Freedom Flagship Fund, they're Freedom Notes. So they're structured a bit differently than a typical syndication. We can get into that. But to answer your question specifically, we do both. We're raising for our fund primarily. That's what's going to deploy capital into the deals. But there are investors who want the depreciation. And our Freedom Notes are more of a fixed preferred return, and you're going to get a 1099. So if you want depreciation as an investor, then you're going to be in a sidecar. So almost every single time we do have like an SPV on the side that allows investors to go direct to deal, while our fund then also invests.
Okay. No, that's a great way to structure it for sure. And maybe for the audience, explain that just a little bit. So special purpose entity or special purpose vehicle, tell everybody exactly how you can have, multiple ways to invest in a particular deal, and kind of what the distinction would be, and why would you want one over the other, maybe?
Yeah, that's a great question. So in the fund, the reason that people love the fund is because we've built it in a way that's very simple. And we did that because a lot of the investors that at least were coming to us they've been burned in some way, shape, or form before, and they wanted to understand who they were investing with, what the track record was, and exactly what they were going to get. Not I'm going to get a 6% or 8% preferred return, and maybe this. They wanted to know exactly some predictability, reliability. So we built the fund to be 8 to 14% returns, an income track if you wanted income, a growth track if you wanted it to compound and just let it grow like crazy. And so the people that are in our fund are there for the simplicity, the predictability, the reliability of whatever path they chose, and the diversification. They understand what asset classes that we're investing in, and they want to be diversified across all three asset classes. The people that are going in the sidecars, the special purpose vehicle, this is a different entity that's specific to the asset itself and allows them to invest in that entity only for that deal. So they're not getting, they're getting a different return structure, perhaps, because a lot of people that go in the SPV are what we call eagle investors. So they've got $1 million or more, and they're saying, hey, I need X. And it could be a custom return schedule. It could be a custom goal, whatever it is. We're going to tailor that return inside that SPV specific to them and what they need. And they're a big investor, so we're fine doing that. And it's going to say, here's the property. Our fund is investing, and then our SPV is also investing. But our fund investors are getting one return schedule, and our SPV investors are getting a totally different one. Many times, why you're going into the SPV is because of different goals, specifically tax benefits.
Right. And on the fund investments where they're doing the 8 to 14%, are they participating in the gain at the end, or is it set as a structure? Okay, yeah, that's so it's set almost like a set debt. From your standpoint, you're just saying, hey, this is how much we have to pay them on the money that they've invested within, and then I would imagine the SPV investors do have an opportunity to participate once the sale happens, whenever they decide to sell.
100%. So the people that are going into the fund are specifically going in there for that hey, I want to know exactly what I'm getting and I want to rely on it. It is a preferred return. They get paid before we do. So all the way up to, the tops, the 8 to 14%. And so the people in the SPV, they have different goals. They're also usually more sophisticated investors and want the upside, and they're okay with the, I might get it, I might not get it. They understand all the,
Risks.
waterfalls and hurdles, and they understand that language and they're comfortable with it. And that's really what we talk to investors about is, invest in what you understand, right? And
Right.
so sometimes at the beginning, it is the fund. And as they learn, sometimes they're like, okay, now I understand what I want this bucket of money to do. And I would like
Mhm.
to do an SPV and have those tax benefits or a different structure.
Yeah, for sure. Regarding the tax benefits, are you specifically talking depreciation? And maybe for the audience, can you kind of explain, what that looks like for a potential investor?
Yeah, so it depends on the deal, and every single one is a little bit different. But depreciation obviously is the big one. Bonus depreciation too
Mhm.
is a big one. In fact, we're actually going to create a fund, or we're talking about it. We'll see for investors because this is like a big need for a lot of investors who have W-2 income and they just need to write it off. And so we are creating a fund that's like big on just every deal in there is going to be bonus depreciation. And so that you're getting a big write off in year one. Now, here's the catch. And not a lot of people understand depreciation recapture, right? And
Right.
so we have structured some of our deals so that we actually stay in them. I would love to hold every single deal that we buy. Like we took the time to buy it, rehab it. I just want to
Yeah.
keep it. Let that cash flow keep running. And the fact that we do that allows the investors to stay in it too, so they don't have that depreciation recapture. So there's a lot of like things that we're thinking about. Who's investing in this? What is the goals of us? What are the goals of those investors? What are the things that we can do in order to focus on preservation of capital and just make it as simple as we can for everybody.
Yeah, no, I think that's great. I mean, you've been dealing with so many different investors, and like you said, some people want something in for one season of their investment life, right? And then others, and same thing with operators. A lot of times, it's essential to be able to provide the investors the liquidity event at some point, but if you've got enough people that you've worked with for a period of time, there's going to be some of those people that say, I don't really need that. I would like just to, recognize that cash flow and, you're familiar with the asset, you've been taking care of the asset, you've been keeping it up. And, there's no reason why at some season that you need to sell necessarily.
Yeah,
So,
100%. I always say every dollar should have a job, and when you invest, it should be done intentionally, and you should have conviction around what you're investing in and why. Because we all know building wealth is a long and strategic game, and it's not any get rich quick is a
right,
joke to everybody who's in the actual game.
right.
And so if you have conviction about what you're investing in, you don't get emotional, you don't move it around. So I would say that most people, probably 80% or more, are on the growth track. Like they understand, I'm going to invest in this because I trust the team. I understand that what they're investing in. I understand what job I want this bucket of money to do for me. And I'm going to set it and forget it. And I'm going to add to it. I think that's what we try to educate people about the most, because I think many times people that I heard this from somebody else and I'm going to repeat it. Sometimes it's not a real estate portfolio. It's a financial junk drawer. So what I mean by that is you're just randomly investing in whatever. Oh, this sounds good. This operator sounds good. I want to be diversified across operators too, because I heard that's a good idea. And so they
Right.
hear all of this stuff and they throw their money out in all these places, and they don't actually know what they invested in or why. And so I really try to educate people that, hey, understand what you want, out of life. There's the ROI and what you make on your money, but there's also ROL and the financial peace of mind that you
Mhm.
understand what you're doing and there's a strategy to it.
Yeah, for sure. I would love to hear, because of this is an amazing journey that you've had so far, and all these various, going from single family, going from the cruise ship, to meeting your husband and everything else. But along the way, when it comes to the real estate investing, what are some of the biggest lessons that you've learned that have kind of helped, mold your current strategies and, your current philosophies when it comes to investing?
Yeah. So I would say the thing that I've learned the most is that passive income is misunderstood, because it's why I shut down my turnkey company, because I really thought I'm not only going to build wealth for myself, I'm going to build it for other people. And when you think top of the funnel and you think real estate, when people come top of the funnel, they think I need to become a realtor. There's my way into real estate, or I need to become a landlord, right? And that's the two ways that they come in. They come in because they think that's the only way to come in. And some people still to this day think that you have to be incredibly rich to even get into the real estate world. So you're still having that conversation. And so the rental property game, so many people have gotten into it and just realized this is part active, real estate. You're not receiving passive income. You're not receiving a check in the mail that you don't have to pay attention to. And so when I learned that, I was looking at my turnkey investors and seeing what I tried so hard to do is set them up for success and explain what it's like to have a rental property and what it does for you and the different variables and what you can expect. Well, it doesn't matter if you're a physician or an attorney or some other high net worth job. When you start having spent so much time on this stuff that you thought was going to be passive, you're getting frustrated, and you're getting frustrated at tenants being gone and you having to pay for the turn, and you also have to pay for your leasing agent to actually lease up the property again, and you've got nothing coming in. And so that frustration made me go, this is not how I want to live my life or build a business. Like, I'm trying to help these people actually build wealth. And so I looked at my private money lenders and they were just so happy. They're just giving me money to buy the property. I renovate it. And when it's done and sold, they get their money back and they get to do it again. And I was like, that's true passive income. Now I understand the difference between why this business seems so hard, not just because I had to vertically integrate it to make it successful, but just from the investor point of view. And them not understanding, them thinking a landlord is what I want, and me thinking a landlord is what they want to be too. And finally understanding these guys are just passive investors. They just want to do what they love doing. They want to heal people. They want to help people. They want to do what they're passionate about. They don't want to be in real estate. That's what they trusted me to do. So that is the biggest lesson I learned in real estate, is understanding what your goal is and being very intentional about what you're doing and why. And there was, I don't know what book it was. There was a book that I read that gave this piece of advice, and I think it's really, really smart. And it's to, when you think you want to do something, go find the person that's doing that. So if you think you want to be a landlord, go talk to a landlord with 10 properties or 20 properties and say, what do you think? Now that you've done it, like, can you tell me what's a day in the life? And they're going to start telling you a day in the life of a landlord with that many properties. I was just doing an interview the other day. He said, my brother-in-law's got like $12 million. And he went and bought a rental property. You know what he does every Saturday? He goes to the rental property to fix something. And that's not what he wanted. And so I think that was just, again, it was just a gold nugget for all of us in life. Whenever we want to do something, go find somebody that's actually doing it and hear their story and then decide, do I actually want that life?
Yeah, for sure. For sure. That's great. And then, so tell me a little bit about call it the next 3 to 5 years. Where do you see Freedom Family Investments going? Are there some things that you want to double down on that you're currently doing? Are there some things that you haven't quite done yet where you're thinking, this is an area I see some potential in. I just need to figure out how to structure it.
Yes, 100%. So I talked about needs-based real estate earlier, and how I define needs-based real estate is somebody needs it no matter what. Economy's up, economy's down, somebody needs that particular thing. And so there's real estate asset classes that are not needs-based, and we do not invest in those. So primarily we're in multifamily, senior housing, self-storage. And I was just on a call with a broker-dealer earlier today, and he was talking about something that he's under NDA about, but I got enough insight that I was like, oh my gosh, that changes the game, and it totally falls into needs-based real estate. And it's about to go like on the public market. And so he's got like $500 million behind him. It's going to go up to another billion. And those are the conversations that I'm having around needs based. And everybody's saying it a different way. They're saying recession resilient. They're saying essential real estate. I'm using needs based because it's very easy to understand. And I do have a lot of conversations with people that are saying, I want to get into real estate, but I'm not exactly sure that I understand everything that's being said. And, a confused mind says no. So I'm trying to help people get in there by using very simple language. And that's something everybody understands, that no matter what's going on in the economy, we need a roof over our head, right? So multifamily, even though despite the last 2 years, there's blood in the water. Everybody knows there's blood in the water. And there's deals that we can actually go capture and help and turn those properties around and get investors involved. So I'm not discounting multifamily, but senior housing, we all know senior housing and the need that's there. And that need's going to be there for 10 to 15 years. So to have that kind of belief in an asset class and be able to explain it very plainly to the investors that are confused and they don't know where the world's going, they don't know what's going to happen in the market, they don't know how AI is going to change their life or their job, they just want certainty, right? And so needs-based is the primary conversation that I'm having. So that's what I'm focused on. There are some needs-based assets besides those three that when people bring me deals, I'm like, oh, that's not even something that anybody's talking about right now. And that is absolutely something that is going to be an advantage if we get in early. So that's where I evaluate everything across needs-based. And if it doesn't have needs-based to it, I'm not doing it.
Yeah, no, it makes sense. There's got to be that demand for it for sure. And you're right, senior housing and, multifamily, like you said, multifamily has gone through a little bit of a rough deal and the pricing is still a little bit wonky, trying to get where is the true price of everything and where the seller's going to come to a realization that things have adjusted. But it will happen, it's just a matter of time. And it's always been a good asset class. So.
For sure.
So, okay, so you've got those. And what about the self-storage? Tell me a little bit about that. Do you have some self-storage right now? And, what does that look like? And what do you like about self-storage?
Yeah. So when we were studying asset classes in the needs-based category, I was actually surprised at self-storage. And at the time of our research, it was outperforming multifamily year over year over year. Now, right now, I think it depends on the market because I'm talking to a lot of operators in self-storage that are like, I am not doing good right now, but supply is going down, demand will go up. So I'm sticking to this asset class. I know it'll go up over the next couple of years, but they slow down, what they're doing. So what I like about it is actually the new conversations that I'm having. So self-storage is starting to expand in its use. And it's because of what we've all turned into. We all work out of our house. And now more and more people are getting out, right? So there are some asset classes that are having some more demand because people are starting to go back into an office. But self-storage still has this opportunity that people are, if you find the right operator, they're tapping into things that hasn't been done before. And they're seeing the demand and they're filling up these self-storage facilities. So what I am doing in self-storage is not looking at what are they, like CubeSmart or, the typical self-storage. I'm not looking at those. I'm looking at who's operating in the self-storage space and who's doing something new and unique right now that they're seeing it hit and they're finding traction. What markets have they done so far? And is that sustainable through, the next 5, 10, 15 years based on where we see the economy going? And so I'm specifically looking in the self-storage class for out of the ordinary uses for the property, if you will. And like I said, I can't say it on the podcast, but you're going to see something come that you're going to be like, holy cow, let me get in. And then I hope you call me because I just got that. I said, I want in on that. And I said, just put me in line. As soon as you can let me talk about it. I want to be an operator. I want to be a capital allocator. I don't care, but I want in on that asset class because I would have jumped on that opportunity like 2 or 3 years ago. And I didn't even think about it. And it's a brilliant idea. So that's where I would say, if you're looking at self-storage, start looking at, all the new things starting to happen right now.
Yeah, that's interesting. Now you've got my curiosity for sure on that one. So I'll be keeping my eyes up. How can people find out more about you, more about Freedom Family Investments, and follow you and invest with you as well?
Absolutely. So go to chatwithfreedom.com. And actually, we're doing something special for your listeners. So chatwithfreedom.com. Once you go there, you can book a 15-minute discovery call. On those calls, it really is, we're not going to tell you about our offering unless you ask. We're really there to understand your goals. Like, what job do you want your money doing? What's missing? How can we help you fill the gaps? And we feel like if we feel like we can serve you, we're going to let you know what that looks like, and you can make a decision from there or have future calls and continue. So it's 15 minutes. It's short to see if we're a good fit for you. Feel free to schedule one of those calls. But also, if you type in, there's going to be a box. And we're giving away, I've just released Calm Money Never Panics. You mentioned it in the bio. #1 Amazon bestseller. And it really talks about some of the things that we talked about today and about intentional investing and about the long strategic game of building wealth. And so we're giving that book away for free to your listeners. They just have to type in wealth flow so that we know it came from Keith.
Sounds good.
So go to chatwithfreedom.com, type in wealth flow. You'll get a free copy of the book. And if you want to jump on a call, we'd love to learn more about you and see how we could help.
Perfect. Love the name of the book too. It's that's a great name. And then how about, I've got 2 other questions. First, this has been really good, so I appreciate it. I've really enjoyed our conversation today. I do have 2 other questions. One is just any advice you would give somebody who's maybe just starting out in their investment journey?
Yeah, I'm going to say find the person that is doing exactly what you want to do. I think it's that book's advice. I've always got coaches and coaches, mentors, masterminds. I've listened to podcasts like yours. I find the people doing the thing, and I find people who have aligned values, who I actually trust, right? And today, as AI continues to fool us more and more and more and more, where we don't know what's real and what's not, it's so important to be aligned with the right people. So I would say if you're starting out, figure out where you want to go, ask the right questions, follow people that you know are real and that you trust, and get their help, because everything that is worth doing is better done with a team and around people that you actually align with and are going to support you on the path.
No, for sure. Exactly. And me too. I kind of second that as far as getting around the right people, the masterminds, all the good stuff. It helps you grow. You're seeing people that have already paved that street ahead of you, and you can kind of see what it looks like. And also, like you mentioned, something, you can also see the good, the bad, and the ugly. You may think that you want to do something, and then you're like, okay, never mind.
Exactly right. Wow, that saved you some money and time.
Exactly. All right. Besides Calm Money Never Panics, what is a book recommendation? Doesn't have to be real estate related, certainly can be. Something you've read, though, that's been impactful.
Yeah. My absolute favorite book is Who Not How. And that book is so important to me because I believe when you're on a journey, you can't expect yourself to be the expert at everything, right? Keith, there are experiences and knowledge that you have that just far exceed what I'll ever have and maybe ever have a passion for having. And so I really believe in finding the people who can help you on your journey, and it's vice versa, right? Because I'm going to be good at one thing, they're going to be good at another. So, investing the time and money into people who want to ride the ride with you. You just go to bigger places, you get to help more people, you do more things. I love that book.
Yeah, for sure. Great recommendation. All right. Well, this has been fantastic. I appreciate you being a guest on The Wealth Flow, and I think we'll call it a show. Thank you so much.
Thanks, Keith.
Yeah, thank you. Thank you for spending part of your day with us here at The Wealth Flow. If today's conversation gave you new ideas or perspectives, the best way to support the show is by subscribing and leaving a quick review. And sharing the episode with a friend or a colleague, it truly helps us continue to bring you great guests and valuable conversations each week. And if you're an accredited investor and interested in the future of AI infrastructure, be sure to visit slipstreamaii.com. There you'll find information on our current investment opportunities, including our data center land fund and our innovative dual fund that combines commercial real estate with modular data center. You can also schedule a call with our team to see if one of these opportunities is a good fit for your investment goals. Thank you for listening to The Wealth Flow, and we'll see you in the next episode.
Being that you're still here, I trust you found value in this episode. I personally wish I would have known these guests and strategies when I started my wealth creation journey. Go to wealthflow.capital to subscribe to our newsletter. And as a free gift, we will send you our quarterly market report and the top 10 things to look for in an investment opportunity. Take a minute to give our show a rating and review. Help us reach 1 million professionals by subscribing and sharing this episode with someone you know who could also find value in it.